Gautam Shah is ready. Let's connect and let's say hello to him, understand what he makes of the current market setup. Gautam, good morning. How you been, my friend?
All well, Nikunj. How has it been with you?
Well, no one's complaining in this kind of a market. Only the folks who did not watch our shows and did not get the right advice are the ones only complaining, right?
True.
Okay, we've seen a 10% rally on the Nifty, 15% rally on the Bank Nifty. Is this as good as it gets for the summer rally of 2023, or this party will continue?
Well, I think people are looking for a reason to celebrate the Nifty hitting lifetime highs. But honestly, I think for the last 6 weeks, there was a celebration every day at the markets. Given the kind of strength that you see in the broader markets, Nifty, Bank Nifty, and some of the top sectors have just been quite irrelevant. I think one needs to understand that the last 18 months, which was a pretty challenging period because the Nifty broadly traded in that 16.5, 18.5 kind of a band, it was a market where large caps stood out. That's the space where there was a lot of outperformance and broader markets actually lost a lot of ground. Till 6 months back, I think 60% of the market had lost about 40% from the highs. So that's the kind of extreme statistics that we were working with, and therefore there was obviously room for a lot of recovery. And if you actually go by the ratio charts, which is the mid-cap index divided by the Nifty or the small-cap index divided by the Nifty, that saw a massive breakout a couple of months back. So really the trade has been outside of the top 100 stocks. And I think this is going to continue for the rest of the year. Nifty hitting lifetime highs or going higher, I think is just going to be a formality. I don't see the index running away from current levels. We are a little overbought at these levels. 18,900, 19,000 is a point of resistance. So I don't think large caps are going to do anything special. But this mid-cap, small-cap rally, I think is going to continue. And there will be internal corrections along the way. In fact, what I have seen in the last 3 months really reminds me to that 2003 period, which I'm sure, Nikunj, you also witnessed, wherein the index doubled in value, just gradually going up every single day. So focus on stocks, ignore the index would be my takeaway to your viewers.
Yeah, but it actually went up more than double. I think it started from 4,000 and then topped out closer to 20,000, or 5,000. It started close out to 20,000. So what to your mind is the starting point for this index? Because we've been asking everybody on the channel that Sensex 1 lakh kab hoga.
It's quite irrelevant. I think these are fancy numbers which people like to keep talking from time to time. I think the idea is to create wealth. The idea is to be in good stocks. The idea is to be in structural stories. The point about 2003, I was referring to just 2003, wherein a 3,000 Sensex became 6,000. And then obviously it moved up 7 times over a period of 2003 to 2007, 2008. But I do believe that at levels of 19,000, I think the large caps in the index is richly valued. And you don't have a global environment where everything is doing well. India has stood out. US markets have started to do well. It's only the Nasdaq which has actually gone up. Look at rest of Asia. None of the markets apart from Japan have done very well. European markets have just stabilized around 52-week highs. So it's not a global bull market as such. It's more like an Indian bull market backed by domestic liquidity and aided by foreign liquidity, which has really come in the last 1 month. And I think this trend of being stock specific will continue based on the ratio chart analysis, which I just put out.
Hi Gautam, this is Anisha also joining in the conversation. What's your take regarding IT? Because the street is divided whether it's bottomed out or not. What does the chart pattern tell you?
I think it's bottomed out. I think I'm very clear that for almost 15 months, this index went through a large correction after the 2020-2021 rally. And it went through a price correction initially. And I think the last 3 or 4 months has just been pure top quality time correction. At a level of 18,900, you don't have too many sectors or stocks in the market which give you a good risk reward to take a trade or in fact an investment bet. And I think IT is right up there. So between now and the next, maybe till Diwali, I would actually bet for IT, pharma and metals, 3 of the underperformers of the last 6 months to actually do well and take the markets higher. Not to ignore the mid caps and small caps, which obviously are in a zone of their own. So I actually like all the top, IT stocks, whether it's HCL Tech, TCS, Wipro, Infosys, pretty much in that order. And I think there is a 15% upside on the index and much greater upside for stocks.
But Gautam, you think we're in that kind of a market where the traditional heavyweights will continue to lag? Not much participation coming in from HDFC Bank, from Reliance, or for that matter, even SBI, as compared to what's happening outside of these indexes?
Aisha, that's exactly what has happened. These large cap names have really become elephants, and it's very difficult for them to now run. So that's probably the reason they will see their gradual move up from time to time. And the reason for Nifty's underperformance is because HDFC Twins, ITC to a certain extent, Infosys, TCS, Reliance, these top 6-7 stocks have just stopped moving at a, rapid pace. And I think this trend will really continue unless you have some major trigger. And let's not forget, you have the earnings season coming in next month. You have the general elections, some state elections, coming up later this year. So all of these factors will play on the index, but not on stocks.
Gautam, you said how, let's say a figure of 100,000 on Sensex, etc. is theoretical, but what's your own, analysis telling you where the Nifty is headed by the year end? Any number, any target in mind?
Well, you know what? It's been quite crazy in the last 18 months. The moment you would have given out a bigger target, you saw that 2,000 point fall on the Nifty and vice versa. It's been like a pendulum in the last 18 months. And it's the kind of world where you cannot look too much into the future. Yes, it's all good to talk about structural story, 5-year story, 10-year story. It looks good on paper, no doubt about it. But not every investor in the market can really handle that kind of patience, which today's world provides. But still, if you want me to put out a number, I think my working number on the Nifty has been 20,400. And I think maybe, before the general election results next year, we should get to that number. But the problem is, it's not big in percentage terms. I think the real return is going to be again in the broader markets.
Okay, so Gautam, let's talk about the broader markets. Share with us some ideas where you think one can still, get into and you still see a significant headroom which can beat the index returns.
Aisha, if you look at the Nifty 100 index, Nifty Midcap 100 index, for 18 months, it tried to get past that level of 33,000. So I think there were 7 or 8 attempts to get past that number and it failed. And the broad range was about 26,000 to 33,000. So if you're going to have a 7,000-8,000 point kind of a breakout, I think the working target is about 39,000, 39,500, which I think is about 12-15% away from current prices. So that's the kind of upside potential that we see in the mid caps from current levels, and about a 10 to 12% upside on the small caps from current levels, because we are looking at 12,000 on the small cap index, which is the lifetime high. But I think there are some very interesting pockets which have developed well. Cement, I think, looks very exciting to us, large cap and mid cap cement. Textile is finally making a comeback. The entire unlock space led by Indian Hotels, Delta Corp, I think looks very hot on the charts. Fertilizer has done exceedingly well. Auto ancillary, I think, is the story of the next 6 to 12 months. And not to forget the QSR space, something that I have liked all along, whether it's a Devyani or a Sapphire, and now even a Jubilant Foods. So some of these, stocks and the manufacturing theme, the industrials and the manufacturing theme. So these 5 or 6 themes which I just put out in mid cap, small caps, top quality is where we are focusing on.
Okay. I go back to that very basic point, Gautam, that in this kind of a market, what should be the best strategy to maximize? So you say stay invested, party abhi bachi hai. But should one simply stick to their investment and the long positions, don't look at SGX, don't look at what's happening on Wall Street, don't look at crude prices, just stay the course? Or it is time to now periodically start booking profits, let's say 10% at every 10% rise?
Nikunj, thankfully SGX is no more, so that's I think great for a lot of traders and investors who used to watch this every single day. But I do believe that the last 18 months was all about playing 2020 at the markets. You had to take those bets over few weeks to few months, and if you did not get out, you were on the receiving end, very, very quickly. So that was the last 18 months. Now I think we've got back into test cricket mode, which was basically 2020, early 2021, wherein you bought and hold and you played the run-up. So I think we are in that kind of a space wherein your passive portfolio should be about 60 to 70%, and your active seasonal kind of a portfolio should be 30 to 35%. And I think if you just stay with top quality stocks, because even so far the rally is still in grade A and grade B, it's not moved down to grade C and grade D. And therefore, I don't see any real froth in the system. Yes, we are overbought, but there is no froth. So just to answer your question once again, play long-term, buy and hold, I think is the right approach, because you don't want to get out cheaply when there is big returns to be made.
You believe that autos are overbought, pullback, rally likely. Capital goods stocks overbought, pullback, rally likely. FMCG stocks overbought, pullback, rally likely. what could be the extent of the pullback rally in three of the performing sectors? Because if you really look at the three horsemen in this market, it is auto, capital goods, and to some extent FMCG.
They are extremely extended, Nikunj. I think you get a scenario wherein you feel that this is going to continue forever. Honestly, that's the kind of space that we are in. But I just feel that some of these top performing sectors are very overbought. Now, overbought does not mean that they have to correct big. It could just mean that they get into sort of a time correction for some time. And I'm not looking at a correction anything beyond 3 to 5%. So the three sectors that you mentioned, auto, FMCG, and capital goods, could actually see a 3 to 5% correction and more of a time correction going forward. But in the same period, I think IT, pharma, metals, mid-cap, small-cap, and real estate, I think are pockets that we like, and we would continue to look at long-side opportunities.
Why do you think metals will remain steady? Because that is one space where this year has been extremely unpredictable. I mean, it is a space where the pendulum has swung twice, not once.
That's very true. It's just that the charts are developing quite well. Honestly, I would not be in a position to give you a fundamental reasoning to my thesis on metals. But I just feel that, it's the kind of market wherein the baton is being passed from one sector to the other. And I think it's now got passed to metals. Look at Tata Steel, look at where JSW Steel is, JSPL, and some of the smaller metal companies, RK Forgings of the world. They're all doing exceedingly well. And the damage was very large, in the last 6 to 8 months when it went through that correction. So purely from a risk-reward perspective, earnings perspective, and obviously from a charts perspective, I think metals is a space that can do well and can go back and test new lifetime highs.
Hey, Gautam, great to have you on the show. Thanks, as always, for, dropping by.
Thank you.
Let's move on. Let's just